Today in the markets, I ended up taking 3 trades. The first 2 trades were both losses. The third trade was a win. The third trade swept out every single loss I'd made on these accounts pre to the last trade I took. So in today's video, or whatever, I'm going to be showing you how I am up $6,800 on a day. So let's get into it. So, as you can see, if we turn the executions off, I'm up 2 bags on 4 different accounts. One of my accounts is still down 1.2k. That is because as markets opened, the first 2 trades I took, I ended up losing both of them, which lost me $615 on that trade and $612 on that trade. This was on my main account. I copy traded 5 accounts throughout this whole process, these 2 trades. And as soon as I exited the second trade, I ended up locking my account up because I understood I had $540 to play with. $540. That is because yesterday I ended up taking 1 trade in the PM session, and today I took 2 trades, layering in to both of them. So, after acknowledging the fact that I had $550 to play with, I locked up my main account. I then unlinked all of the other accounts so that I could copy trade them, and fucking hell, boys, we had the resurrection of resurrections. We swept out $1,450 of losses in this one bad boy. So, without further ado, was it luck that I ended up in this position? Pretty much, yeah, because at the end of the day, I went against every single rule for the majority of these trades. So, am I proud to be in this position? No. Am I going to make the most of being in this position? Extremely, yes. So let's get into today's price action. So, as you can see, absolute shocker on the 15-minute. It's been consolidating for the past 1 hour and 30 minutes, which is just absurd. You do not see price action stack up like this very much. Even on, let's say, a no news Monday or a bank holiday, price still doesn't really stack up this much. So going into the morning, what was my bearish? What was my bias? My bias was bearish. That is because yesterday we had an extremely big dump. And just before we get into the technical side of it, some people say after a massive dump in the markets or a massive rise in the markets, you should not trade the day after. And I've got to say, today is that day where that rule did not enter my consciousness at all, because we are in such a prominent position for price to have a nice continuation to the downside. So let's get into it, man. So as you already know, I mark out 3 different types of liquidity on my charts. So I'll mark out my session highs and lows, days highs and lows, and the opening gap range. So looking at the opening gap range, we can see that we have a bullish opening gap range. Here we've got Asia high, here we've got London low. I didn't mark out London high because no need, because it had already been taken, so it has no significance. Asia low's gone because it had no significance either. So main 3 draws on liquidity today are Asia high, London low, and previous day low, and maybe low of week as well. But anyway, going into the markets, we could understand that we had a bullish opening gap range, because as soon as price is at like 9:25, so let's say 9:25 a.m. in the morning, just before New York Stock Exchange opens or the Nasdaq opens, we can understand that price is going to produce a bullish opening gap range. So tied in with the fact that we have 2 main draws on liquidity left on the table, we have got Asia high and London low. If we want to be bearish in the day and we want to anticipate that this bearish 4-hour for value gap is going to hold, all of these bullish for value gaps and the chance of bullish price action has been completely disavowed. If we're anticipating that price is going to stay bearish, we would like to see Asia high get swept before we go to London low. That is because, as you already know, let's say you got 2 points in the chart, previous day high, previous day low. As soon as previous day high gets swept, there's liquidity built up all inside this range, which means that next, market should sweep around and sweep up previous day low. So just going off that basis or that bias and analysis, we can understand that looking at price action and how it clogs up upon market open, as soon as Asia high got swept out, we had every single reason to move to London low, and not even just London low, but data low as well. So, understanding all of this sell side is built up on the charts here, and here, and here, and here. We have got our external draws and liquidity being the low of week, previous day low, London low, aligning with our internal draws and liquidity being data low, and all of this low resistance liquidity here. So understanding all of this and how price has manipulated to the upside, because if we want to see a bearish day, we want to see manipulation higher before we go lower. So understanding that Asia high has just been swept out, we would like to see a lovely, 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 lovely reversal off of it. So if we look at the charts, we can understand that price has already had an absolute bomber to the upside just to get bitten down once again, not sweeping out any significant internal lows. So understand that price is stacking up liquidity internally here. Price then runs higher, sweeps out Asia high, inverses this 1 minute for value gap, and here is where I got my first entry. So I think I got my first entry in here in the markets. Stop loss at this high, I was risking $380, I'm pretty sure, off of 3 MNQ contracts. So I was looking for London low. Maybe I would have taken I probably would have taken partials at data high. What am I talking about? I probably would have taken partials. Well, no, I would have taken partials at data low. But yeah, price ended up not quite making it there. So as soon as this 1 minute for value gap got inversed and we closed below this candle here, creating our 1 minute change in state delivery, I was like, cool, I've got full confirmation that we are going to go bombing to the downside. And that was where I made my first mistake in a tiny way, kind of. So as soon as price closed below this CISD, I was like, cool. If we have a little run to the internal range here, being this high here, if we start producing a bit more downwards momentum, I can adjust my risk so that instead of me risking $380 at this high, I can move my stop loss to somewhere in this range and end up risking the same, but increase the overall take profit that I can take out of the markets. So that is exactly what I did. I saw price have a steep reaction. I saw price have a steep reaction after touching this area here. I ended up adding in some more contracts right here, which made my average fill to about there. I was putting my stop loss like here, I'm pretty sure. Sorry, no, I'm talking shit. It's like here. And yeah, as soon as price rejected this low, it was pretty, sorry, what am I talking about? As soon as price jumped higher and closed above this high, clearly it was just a manipulation leg, and unfortunately, first trade, loss. That trade was not good on my end based off of the fact that I was not risking the amount of bucks that I should have been risking. I naturally enter trades risking $250, but I just had such clear conviction in this trade working out that yes, I was reliant in the trade working out, or I would have, say, been annoyed because I broke my rules because I over-risked. But at the same time, I had full fucking conviction. I betted on myself that this trade would work, and let's be for real, it did work out. I just didn't manage risk well. I didn't keep my stop loss where my trade would have been invalidated. I got slightly attached emotionally to the dollar number on the screen, and I paid the consequence. So understanding that price is somewhat respecting this wick now. As we can see, price, when we're below it, we are bullish into it, and then we reject off it lower. When we're below it again, that isn't a good example, but if we look on the 1 minute chart, we can understand that price wicks into the top area of this wick and then rejects swiftly. So understanding this and understanding that if I'm entering a short position here and price, let's say, confirms this change in state of delivery, I'm going to move my stop loss to break even because I can expect price to have a nice little continuation to the downside. So these trades were basically just pure seek and destroy. I was the person entering once other people had ended up getting stopped out at break even. So understanding that this inverse fair value gap is seeming to hold, and we've got a new fair value gap that got broken through, I entered in another position here. I was risking, I don't even know what I was risking in this trade, but anyway, first take profit would have been data low. Price ended up swooping all the way to the downside. As soon as we got to the opening gap range low, which just acts as a support and resistance level, aka when we're above it, when we trade back into it, we want to trade above it again, but when we're below it, we want to trade back into it and go lower again. I ended up just getting a bit cocky with the fact that price ended up having a massive bullish internal spurt to the upside, sweeping out more people who had gone break even after these internal lows had got swept out. So another seek and destroy trade. It was actually, my entry was here. I kept my stop loss up here so that I could protect myself from if price wicked into my break even and rejected off of it. As soon as I saw that price wicked into where my entry was, I've moved my stop loss to like here, and I layered into the position, or I scaled in. I scaled in about here. Unfortunately, we took another $600 loss. At this point in the day, I was completely fucking pissed off because we had every single reason to sweep out all of this sell side liquidity. We had not swept out anything meaningful. We hadn't done anything in the markets. And is it a good place to be in? Is it a good mindset to have that I am so confident in this trade that I'm going to carry on re-entering it until I get it right? Absolutely not. But today was just so it was just so obvious. And as we say, or as it's shown, if you don't manage risk properly, then you will enter trades, if you don't risk manage appropriately, then you are going to enter multiple trades in the same move. As shown, I ended up entering not one trade, not two trades, but 3 trades to make one move, where if I had have just risked appropriately, kept my stop loss at the high, take profit at the low, it would have been calm. But anyway, trade number 3, the one that hooked me up with all of the bread today, was just pure gambling. Well, it wasn't gambling because I had pure conviction that it was going to work out, but at the same time, I put every single account at risk by entering it. Well, I only put 4 accounts at risk, but still, it was either lose 4 accounts on this one trade or make fucking bank, and we made bank, thankfully. So as we can see here, price has not taken out any of these highs. It actually did put in a S&T right here with ES. As we can see, this 1 minute wick, the high of the wick, the CE of the wick, and the low of the wick, we can see that it's just getting fucking rejected swiftly. When we trade into it, we want to trade lower. When we trade into it, we want to trade lower. We're respecting CE of the wick. The whole time, I was thinking about getting an entry up here, but I was just like, cool, let me just see shit play out. Was that a good idea? No, I should have just entered, because either way, wherever I entered the trade, it was always going to be the accounts on the line. But anyway, I ended up getting an entry like here. Clearly, I got no drawdown because I didn't get stopped out. Take profit at the data low. And at this point in the day, I was down 1.2K in each of my trades, or on each of the accounts that I was trading with, I was down 1.2K. So the main bias for this trade was to hold the trade until data low, but as soon as price surpasses these lows, these two relative equal lows here, I'm going to move my stop loss to break even for the day. So that would have been a stop loss of, let's say, this opening gap range, because so it meant that if price traded into this opening gap range, again, I would have got stopped out and ended up being break even on the day. I would have removed all of my losses from the account. But anyway, boys, that trade fucking hooked me up. I am very thankful to be in this position where I have the ability to carry on trading these accounts. But at the same time, it seems that, or it's stated, or it's just put in stone that I am choosing to make these mistakes week in, week out. I am choosing to fuck myself up and not trust the longevity of my strategy. So for the next few weeks, considering I've got the blessing to continue with at least 4 of these accounts, one of them still at minus 1.2, but February is going to be my first 10K month. No doubt about it. And how am I going to get there? I'm just going to follow the same risk plan. I'm not going to do all of this emotional shit, following up with trades that I'm reliant on winning. I'm not going to be doing the make or break accounts. It's just going to be a clear path from here. I've failed so many fucking times that I understand every single mistake that I make. I understand every single decision that will plant me in a situation where I will be emotional, where I will be reliant on X. And this week is going to be a nice little break for me to clear my head up, think through some shit, and get my life back together. So I appreciate you all for watching this. It's a bit of a longer video, but in my eyes, the majority of it was pretty meaningful, and I didn't just talk out of my arse and run. So thank you for watching, and I'll see you next week.